What do today's inflation numbers tell us about where prices are actually headed?
Well, first off, thanks for having me. It's nice to be here. But I think what it tells us is that the story of inflation in the U.S. And kind of the stickiness of inflation is still here to stay. Obviously, it was, I guess, lower. Some people are saying better than expected. But it still is pointing towards inflation is remaining above the Fed's target of 2%. And you have to keep in mind that even though it's above that target of 2%, the Fed is still moving towards an easing cycle. And so for us, it's more about it's not low enough really to justify easing yet. And so I think it tells us that inflation above 2% is here to stay.
And how does this data square then with what consumers are actually feeling?
Well, and that's an even stronger point because here in the U.S. and you're obviously seeing this other places in the world and hearing the rhetoric around the K-shaped economy even more is that you are seeing a more stronger divide. Obviously, that higher middle class U.S. consumer is doing okay and is able to absorb some of the higher costs way better than the kind of lower middle class. When you look at that, the things that you have to buy every day, those are the goods that really have pushed higher the most. And so those that have discretionary spending just aren't feeling it, but you are seeing and hearing more anecdotes of people just struggling to pay those bills. And you're seeing that reflected. Auto delinquencies have picked up. Recent data point, serious delinquencies has approached 3% again here in the U.S., which hasn't happened since the financial crisis. So you're seeing a return towards the consumer, in particular a specific cohort of the U.S. consumer, definitely strained.
And this is the first major economic report since the government shutdown began. What kind of signal does it send about the economy's resilience?
Well, that's been the point for the last 2 years. I mean, we've seen economist after economist calling for a recession, and that's been beaten down by this really strong consumer in the U.S. So the U.S. economy in total has remained very resilient when you view it from an aggregate basis. Like I said, there are pockets that continue to struggle, and there are pockets that probably have been through a recession. But yeah, I think the U.S. economy largely is still doing just fine. And so that'll bring us back to, is it really time for the Fed to cut rates? Are they running the risk of overheating the economy? If the consumer really is this strong, then it may show signs that that we could move back towards, at least an uptick in inflation.
So you're saying the shutdown itself could end up pushing inflation even higher?
Well, the shutdown itself, I think, will in the short term will probably lead to an actual dip in inflation because obviously you've got less workers working, and that would probably cause some unease that would push down some spending. But largely, we're going to move right past that. I mean, you can see it and you can feel it here in the U.S. Obviously, the stock market has had some higher volatility, but we're really not seeing any real signs. If you didn't turn on the news and know that the U.S. economy was shut down, you really wouldn't feel it here. So I think that the overall consumption here probably is going to be largely not impacted by this.
But are we looking at a soft landing, or do these figures suggest a bit more turbulence ahead?
I do think that we're probably more likely to have the so-called soft landing. And I would venture enough to say that there probably isn't going to really need to be any landing, is that we're probably more likely to move back towards an acceleration than we are, an actual recession or even the need for a soft landing.
We're heading into Thanksgiving, Christmas, the holiday period. What do today's numbers really mean for the US economy, do you think, heading into this particularly busy consumer spending period?
Yeah, I mean, look, it shows that inflation is still in the range that it should be. So that means you're probably not going to have consumers freaking out, and so they're probably going to spend right in line with expectations. If we would have seen a print that came in higher, then you may have seen a consumer that is a little bit worried, that may try to see where they can cut, and that might hurt holiday spending. But the fact that we're seeing inflation remain moderate, slightly improving, I think that should bolster the consumer's confidence heading into this and heading into kind of their foresight of what the economy and the stability of their job will be here in the fourth quarter and the first quarter. So I think this really pushes the narrative towards it should be a pretty good holiday season here in the U.S.
All right, Adam Coons, we'll leave it there. Really appreciate your time.
Thank you.